Welcome to MarketSnap's daily market rundown. The AI trade is officially splitting the market in two. Today we saw chip stocks get absolutely hammered, yet the Dow barely blinked. That divergence is the big story. We're breaking down the semiconductor sell-off, the rotation into value, and the blowout bank earnings that are keeping the bull case alive. Let's get to the numbers. The S&P 500 slipped 0.5%, closing at 7,533. The Nasdaq took the brunt, falling 1.47% to 25,881 as the chip rout deepened. The Dow, however, was the anchor, down just 0.2% at 52,552. The Russell 2000 was flat, proving small caps are holding their ground. The VIX spiked 6.7% 16.73, a sign that fear is creeping back in. The S&P is still just a stone's throw from its all-time high, but the internal dynamics are shifting fast. This isn't a broad sell-off, it's a violent rotation. The carnage was concentrated in semiconductors. SanDisk cratered 12.6%, Seagate lost 10%, and Western Digital fell 9%. Marvell and Corning both dropped over 8%. The fear that the memory chip cycle has peaked. Even a stellar earnings beat from TSMC couldn't stop the bleeding, as investors worried about oversupply and softening demand. But while tech bled, other sectors thrived. Abbott Laboratories surged 10.7% after crushing earnings and raising guidance, fueled by its Exact Sciences acquisition. Philip Morris was up nearly 5%, and British American Tobacco gained 7.5%. This is the rotation in action, out of high-flying tech into defensive, cash-flow-rich staples and healthcare. Among the megacaps, Apple was a rare bright spot, up 1.7% and hitting new highs, but Amazon, Oracle, and Micron all took hits. The Mag 7 are no longer moving in lockstep. The macro picture is a tale of two economies. June retail sales came in as expected, but the composition was telling. Consumers are shifting to essentials and pulling back on discretionary spending. Meanwhile, mortgage rates jumped to 6.55%, the highest in a year, sending pending home sales down 5.4%. The housing market is feeling the squeeze. Zooming out to the weekly winners, PayPal surged over 20% this week, and Goldman Sachs jumped 8% after its blowout quarter. Energy stocks like BP and Nucor are also riding the oil rally, with crude holding above $80 on Strait of Hormuz tensions. On the flip side, IBM is the week's biggest loser, down nearly 29% after a disastrous earnings report. AI infrastructure plays like CoreWeave and ARM are also getting crushed, down 14% each. The AI hype cycle is hitting a serious reality check. Earnings season is in full swing. We saw blowout quarters from Goldman Sachs and Morgan Stanley, with investment banking fees surging. United Health beat estimates and raised its outlook, sending the stock to a 15-month high. And Abbott's strong report shows the healthcare sector is delivering. You can find exclusive earnings transcript summaries on MarketSnap. On the geopolitical front, the situation in the Strait of Hormuz remains tense. Iran is warning of a red line, and oil pipelines are being built to bypass the strait. But the risk of disruption is keeping energy markets on edge. Dallas Fed President Logan also called for modestly higher interest rates, adding to the uncertainty. Sector-wise, consumer cyclical and communication services led this week, while technology and basic materials lagged. The rotation is real. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. The key takeaway? Don't confuse this rotation for a bear market. It's a healthy shift from overvalued tech into value and defensives. Stay disciplined, keep your long-term perspective, and we'll see you back here tomorrow for more actionable insights.